Good morning, traders. It is Monday, October 28th. We are about an hour and a half into trading this morning. Sorry for the delay, but it really hasn't mattered because the market's not doing a whole lot of anything. I expect it to flatline into the FOMC statement on Wednesday. Dead till the Fed, as we call it. We do have a nice little market breakout here. You can see a cup and handle formation on a longer term basis. We've got the breakout, the gap higher right here. So far this gap is holding. Let's zero in on the S&P. Really need to hold this open here or we're going to retrace the entire day. So what do? You put in a horizontal alert line right there. That's your stop out point. That's where you shift gears from favoring the bullish side to favoring the bearish side. This is a nice little breakout here. We'll see if it holds. I'm going to put up my 1OP indicator. We'll see if that gives us any clues. It's kind of right around the flat line. The volume's been terrible in the last few weeks. You can see just horrible, horrible, horrible volume. That means that there's a very low level of conviction for this current rally. Asset managers are not rushing in to gobble shares up. They feel that with the S&P 500 being at the upper end of the valuation range, the good news is priced in. Now we do have a couple of events that are reducing risk into year end, and that is good news for the market. We have a Brexit extension until January 31st by the EU. That's good. We also have US China trade negotiations moving ahead. Now, they're not going to have a deal per se, at least in my eyes, but there will be a truce. The market likes the truce because this will not escalate. Trump should keep his rhetoric pretty friendly because he wants to prop the market up. A market at record highs has been one of his battle cries. So he wants to see a stable market. So I see that there's a good, strong bid to the market. The air tends to come out of the balloon once mega cap tech earnings are announced. Apple announces Wednesday after the close. So we have a lot of bullish put spreads on right now that are working our way, and a lot of them expired last Friday, and a lot of them should expire this Friday. If you've got out of the money bullish put spreads that are trading for pennies, buy them back in. Reduce your risk. We'll sit on the sideline. We'll see if we get a little bit of sell the news after the FOMC statement on Wednesday. Now, I believe that economic conditions are stable, and I don't think the Fed is going to be as dovish as everyone would like them to be. Yes, we'll get the rate cut, but I think they'll send a signal that, hey, this is it for us for a while. We're pretty content with the market. Trade negotiations are improving, so that's one threat that we don't have to worry about. Brexit also is a non-issue, at least for a few months here. England, by the way, did pass a vote to a Brexit agreement, which is the first time they've been able to do that in a number of years. So that's a positive development. Hopefully they'll continue to figure it out. So, market, low level of conviction, any pullback is a buying opportunity for us. So if we can reduce some of our risk, reel in some of our bullish put spreads for pennies, take profits on them, we will be ready to reload if we get that little soft patch on Thursday or Friday. If by chance the market absolutely loves everything that the Fed's got to say, then we'll have a chance to re-enter our trade as the market continues to build on this breakout, and we will use that breakout as our stop. So as long as that breakout holds, we'll be fine with our bullish put spreads. We're going to focus on stocks with relative strength. Love them if they've announced earnings and gapped higher. Those are fantastic plays. That's what we've been using. So before I get going, I want to mention that everything that you see today is available on Option Stalker. And I'm going to show you a couple trades that I did right out of the gate early this morning. You can see here we are at about 8:50, so we're about 20 minutes into trading. There's my early morning comments. I got long T, took profits on that. SWKS was a stock that I was watching. I bought the futures and scratched the futures, just wasn't getting the follow through buying I was looking for. Shorted McDonald's, and I felt that the market could have a little bit of pullback. Relative weakness was very, very easy for me to spot this morning. We'll take a look at McDonald's. I also shorted Texas Instruments, bought those back soon after, made money on that, took gains on Texas Instruments, McDonald's. LRCX is one I'm looking at. Bought Roku, and I just exited Roku not too long ago for a nice profit. Everything that you see in this video is available through www.oneoption.com. Option Stalker is our platform. The search engine is incredible. If you like the content, please give it a thumbs up. And please subscribe to this YouTube channel because I'm going to be posting these videos an hour after the open each day, and I will have some great trades for you each day, so you'll be able to take advantage of those. So let's take a look at the market again here, see what we're doing. Really in this tight compression, so not a whole lot going on. So what I'm going to do is I'm going to go right to the bearish side and show you how easy it was for me to find some bearish picks. I just clicked on heavy selling, McDonald's. Right out of the gate, I was short in here. I covered in here. Look at that stock continue to drop. Texas Instruments was another one. I'm going to put that up. And you can see I shorted it once it broke this opening gap, and that was a really nice trade, and I bought it back here. This showed up on week after earnings. There was McDonald's, and Texas Instruments was in here somewhere as well, and it may have since come off the list, but these lists update dynamically. Pretty easy. You can go through and you can pick stocks that are down for the day. So they're week after earnings and they're down today when the market's been chasing higher and higher. That tells me right out of the gate that these stocks want to move lower. Twitter looks like it would be a good short. Take a look at that daily chart. And yes, nice follow through. So this is what this search does, is it takes a look at stocks that have reported in the last 2 weeks that gap down between major horizontal support and that are still below that gap. And so this gives us a chance to look for stocks 2 or 3 or 4 days after earnings and to catch some of this momentum or to sell a bearish call spread. It would be the flip side for stocks that we're bullish on. So this is a search I really like to lean on. And we can also take a look at after earnings. So were there any stocks that are down after reporting earnings this morning? No. Earnings tonight? No. So the heavy selling search was good. We're going to go in and look at those counterparts in the bullish side now. And we're going to try and see if we can find some bullish stocks as well. And strong after earnings is a great search, but you can see many stocks have been strong after earnings because of the huge market rally that we've had. So we can narrow this field by adding a buy signal from our proprietary trading system on a daily basis. I can go 2-hour basis, 1-hour basis as well. These will be our best candidates. So these stocks have gapped higher, they're continuing to move higher, and they've got a buy signal right now on a daily basis. So now we can flip through. I like UAL. You can see how it started the day very strong and it's been pulling back to this breakout right now. So it may not be the strongest candidate. I'd rather see something that's right on its high of the day. That would be a really good sign for me. This is nice, trying to get through that 200-day moving average on CSX. So this is pretty good here. I like this compression and I like this little breakout. It is ETFC E-Trade. Let's take a look at the daily chart. You can see how it's been pulling back. What you would do is you would set your alert here. I can click on that. I can click on that. Now my down trend line is drawn. If the stock breaks through that down trend line, I may want to join the move. So that's how we do it. MS. Take a look at that chart. Yes, absolutely. Really good. Nice. So we're going to set an alert on that. We use the same method. Click there. Click there. That downtrend line is broken. I may have a nice entry point. I just wait for my pop-up alert. We might get some of them during the video that I'm recording right now. Hopefully we will, because those will be excellent buying opportunities. LVS, really like this. So let's go to the daily chart. This is definitely a long that I like. LVS, Las Vegas Sands. So cup, handle, breakout, 200-day moving average, long green bars. Yes, buy LVS. Not through that major moving average. Tesla, look at this compression. Huge breakout. big follow through. Let's see what it's doing on a daily basis. Oh yeah, this one looks good. If you drew your line there, you had your downtrend line, boom, it's telling you, yeah, maybe time to buy. So I would like buying Tesla here, and here's how you manage the trade. You put your alert line here, draw your alert line to this candle. Now you've got your stop. You get a downside breach. Time to take profits. Stock continues to move higher. Trend line continues to move higher. You can redraw your trend line anytime you want to make it more passive so that you're locking in those profits. So yes, I do like Tesla. That looks good today as well. I'm going to continue to go down, take a look for another stock. Intel. Intel I highlighted last week. Big gap up, continuing to perform well today. Zoom in. Yes, stock is making a new high for the day. We're going to take off the 10P indicator. We're going to put up 10SI. This helps us gauge relative strength. On a 5-minute basis, you can see nice and strong. Intel makes the list. PBR. So this is strong after earnings. I'm looking for stocks that have follow through to really good earnings. And this list will continue to grow throughout the course of the week. So we've already got 3 stocks that I really like on the long side, and I've got a couple of stocks that I like on the short side. I don't really know that I need to go any further today because I've given you a couple of both. Amazon is interesting to me because it had a big drop and a big reversal on Friday. Let's take a look at it. Big drop, big gap down on major support, and it rallied the whole day to close on its high, and today it tried to pull back a little bit and to challenge these gains that were made throughout the course of the day. They held, and the stock is actually trading a little bit higher. So I view this as a positive sign, and for anyone looking to sell a bullish put spread, I think you can do it right below this level here. The 1733 level, I think, is your stop. And yes, I think you can sell a bullish put spread down there. The stock should be able to find support there. In fact, we'll know today if it's able to get through that 200-day moving average. If it is, then you can wait for that to happen and you can key off of that 200-day moving average and use that for your short put strike. So take a look at the market again. I really think we're going to be dead till the Fed here. I don't see a lot happening. And if this is breached today, the opening price from today, if it's breached, yes, I would go short. And I'd be looking for shorts, and I'd be looking for this gap to fill, for it to be tested. Apart from that, market really looks like it's going to flatline. It hasn't done a whole lot for today. So I like LVS. I like Tesla. I like Intel. I also like AMAT.